Good afternoon, everyone. My name is Sarah Bettridge, and I wanted to welcome you to the third webinar of our Investor Readiness Program. These webinars form part of the Investor Readiness Program, which BDO is doing in collaboration with the Department of Primary Industries and Regional Development. In addition to the webinars, we are providing practical masterclasses. Due to the recent disruption of COVID-19, we're working on bringing these to you at a later date, so please stay tuned for further information that will come. Additionally, there will be online resources released during the program period, which will be available on the Department of Primary Industries and Regional Development's website. These documents will assist you in becoming investor ready and navigating the capital raising process, so be sure to look out for them also. Throughout this three-part webinar series, we've been discussing the main key elements of investor readiness, which can be broken up into two parts: the path to becoming investor ready and the navigation of the capital raising process once you are ready. Today's final presenter is Margot Beauchamp, who will be taking us through a real-life case study on the investor readiness process. If you missed out on our last two sessions, which covered off on the principles which will be applied in today's case study, and you would like to watch it, you can head to our website and search Investor Readiness. If you have any questions about the program, please reach out to either myself or the Department of Industries and Regional Development. I will now pass you on to our expert in mergers and acquisition, Margot Beauchamp, who has her client, Prue, who's kindly taken the time to discuss her investor readiness journey. Margot is renowned in the mergers and acquisition space and has advised on over 100 transactions with a combined value of more than $5 billion. Without further ado, I'll now hand you over to Margot and Prue, who are going to talk us through this case study.
Thank you, Sarah, and good afternoon, everyone. The things that we would like to talk through today is, first of all, for Prue to tell us a little bit more about herself, for Prue to answer the 4 big questions that you should expect from an investor, give a bit more insights into the key documents that you need to help answer those 4 big questions, what was required for Palgrove to be investor ready, searching and selecting the perfect investor, and a post-match summary. Prue, I'd like to say first off, congratulations. It's a wonderful achievement to build a successful business, but truly remarkable achievement to build a business that has the reputation, track record, systems and processes to be able to attract an institutional capital. I'm wondering if you can just give a little bit more of a background on yourself.
Yes, thanks, Margot, and good afternoon to everyone. I'm General Manager of Palgrove, and Palgrove is a seed stock and commercial cattle business, and we operate through Queensland and New South Wales. My role there at Palgrove is a little bit of as general managers do, picking up a lot of pieces. I do risk, I do some of the financials. For us, I do marketing and HR and general, I guess, business management strategy. So that's kind of what I am now. What I used to be was, husband and wife team, family farmers of a business which ran for 30 years.
Thanks, Prue. I'd like to start today's discussion by going back to the first webinar where Todd Grover talked about there being 4 key questions that we must expect an investor to ask. They were, what does your business do? How much money do you want? And what are you going to do with it? What do I get? And when do I get my money back? So what does Palgrove do? Before I get Prue to explain, I'd like again to pick up points from the first webinar so that you have these points front of mind. You will recall in the first webinar that in explaining what you do as a business seeking an investor, you need a compelling argument as to why someone would buy your pen. So Prue, what was your compelling vision and story for your business that made New Zealand Super want to buy your pen? Take us on your journey.
Thanks, Margot. Yes, it very much was a journey, and we often describe it as a story of our business from when we first started, and that was a family business back in 1969 with feedstock cattle coming onto the property. We then had a family succession where my husband David and I decided to sort of be more specific about what we wanted to do, and we bought out our part of the business from the family. We introduced and pioneered a new breed of cattle in 2010, which kind of was that, we started to think more innovatively, not work on what we had, but sort of started to change our thinking a little bit back in 2010. And then that has led on, as Margot said, to the successful partnering with New Zealand Superannuation Fund, which happened in 2017. We had to have a growth story, and that growth story was very much about developing those commercial cattle numbers, building scale, but leveraging off something that was very valuable in terms of genetics. The way we did things, we decided there was real value in all of our strategies that we'd put together over that period of time. And that was things like, multi-locations, so mitigating against risk. We had a depth of intellectual property that we thought had real value, and we didn't want to lose that by us exiting the enterprise. So we wanted that continuity of the intellectual property. And we had this thing that, it was very hard to describe, but it was culture. I suppose that, it was strong safety culture, but it was also a very strong people business. And so when you sort of look at those things independently, it probably doesn't mean a lot, but for us, when we integrated that, it was a business that we could sort of say, well, this business is passionate, but it's also safe. It's got value in it as well. And that was something that took a long time for us to actually identify what those values were.
So then to the second question you must expect from investors, which was, how much money do you want and what are you going to do with it? How did you get New Zealand Super comfortable with that your plans made sense? Was it just about building your capabilities, or were you also looking to acquire capabilities?
It's a little bit of both for us. The scale of where we were at back in 2017 was not overly attractive to most investors. In this space, investors we were talking to were more used to sort of large enterprises that had already been established, where value chains were in play, where there was scale that was corporate scale. We were a family business that said to an investor, help us build it, come on the journey with us, use our capabilities, and we'll get some capability from you in terms of modelling and investment sort of criteria and good financial management that will help us both get to where we want to go. You don't do that with banks. You don't do that with debt finance. You tell your bank that you've got those capabilities already and that you just want the money. This is a different deal. When you take on an investor, you've got to decide what it is you want from that investor. For us, yes, it was partnering in terms of that investment and finance dollar, but it was more about, if we are going to grow, we're going to need some skills that we don't have already. We developed a structure where we'd never had an advisory board or a board of directors before, and the first thing we had to do, obviously, was develop the skills on that board. Digging into a matrix and making sure that we had everything covered to get us to that next stage. And we looked at it in sort of stages as well. It was kind of that transition stage where we start to get our processes and whatever in place, but then there's the next growth stage that really has you humming like a corporate. So you actually have to have structures that are well and truly accepted to corporate investors. So I guess that's where we started. We started with the dream, the vision, the growth story, and then had to go and find an investor that suited or aligned with those visions.
So to the third question then, what does the investor get? What did New Zealand Super get when they invested in your business?
And this is going to be different for different investment sort of circumstances. For us, it was investment in the land assets, obviously, in the cattle assets and in the IP, and that had, as I said before, a great deal of value. New Zealand also got the people. It got a functioning, not too badly functioning group of people who seemed to sort of know how to operate what they had. So very much about, yes, bringing in capital to grow, but the initial investment was really, they were buying capability. They weren't buying land assets alone and developing their own management within there. They wanted the management, and it's been a nice partnership because of that, because there's respect on either side, that management really did have some value.
And where did capital appreciation and yield, how did that?
So yes, so looking at the financials, and that's another thing. You've got to actually understand what the investor is looking for. Are they looking for just long-term capital? Are they looking for yield, or a bit of both? And in our case, it was both. We had a functioning livestock enterprise that was continuing, had to continue to be profitable. And then land appreciation is important to any investor in the longer term, and our investor was a long-term thinking timeline investor. We knew that we had to demonstrate that return on investment was acceptable to them, and that generally is on a sort of over a couple of years rather than a year on year. As you can imagine, livestock is a very difficult asset or commodity to demonstrate profitability every single year on a 12-monthly. And I think they understood that. It's different if they were just looking at value adding or buying assets that didn't have that capital base. That was, for most long-term investors, that's an absolute must. And I guess we had a track record of being able to show and demonstrate that we could achieve that capital appreciation as well as the yield.
And was it weighted to one or the other?
If it was, we didn't know. And you can't produce modelling to make it fit an investor's requirements, and that's a really dangerous place to try to make it match. I think that the glorious thing about our investment was we didn't actually understand what their hurdles were, what they had to achieve, and that was that ignorance was actually very good, because all we did was present what we knew and modelled up historical financials we knew we could achieve. Now, when you scale that up, that changes somewhat, but historical financials really do guide what you can do. So not knowing that was actually a benefit, I think, for us, because we weren't then trying to make those numbers match. It was up to them to say, well, this is what we're after. Yeah.
So then to the fourth question that you must expect an investor to ask, when does the investor get the money back? New Zealand Super is a long-term investor in agriculture, and understand their investment time frame is more 30 years plus. So what was their thinking on getting their money back from investing in Palgrove?
No doubt, yield is still very important to them. They do look for yield, and within their investment portfolio, obviously a superannuation fund has yield and capital growth. The fact that this was a business that could provide both, I think there was no pressure to outperform the market, and so knowing that those long-term capital gain benefits were going to come, because that's the nature of agriculture over 30 years. I guess there was sort of an understanding that there was less pressure perhaps on that yield in the short term. That's not the case with private equity capital, but it is very much, I guess, why we positioned ourselves with someone like a superannuation, because in our experience, agriculture just sits so neatly in this portfolio sort of area. and we're alternate capital, alternate investment. So for them, we're a small part of what they do in their investment portfolio. So the highs and lows don't affect them at all, but they look in a long-term view, and it was just such an alignment for us to be able to see that.
Bruce, some of the people listening today may be looking for an investor that eventually then they buy that investor out. But in your case, it was the opposite, was it not?
It's very much a decision you have to be careful with right at the start. Talk to all of your stakeholders to make sure you understand what it is you want. You don't want to be partnered with an investor who expects you to stay there for 10 years and you want to be out in 2 or not be in there at all. So I think that's, it's almost a first hurdle you have to get past before you actually go looking, because it's one of the early decisions you'll have to make when you exit, because we know that we won't be here for the next 30 years. We'd be extremely old. And so we know that, at one point we will exit, but that has to be very much, that's part of your initial discussions that you're having anyway. That's the thing that builds the trust, understanding what the other person or the other company wants. And it's just, and circumstances change, of course, but unless you have that vision that you either want to be in or you want to be out, or you want to be half in or half out right at the start, you really, you're not true to yourself or to the investor.
Yes. Okay. So if we can stay with the first webinar, in that webinar, there were 4 key documents that were highlighted that you would need to help answer the investor questions. They were strategy document, business plan, financial model, and valuation. Prue, to help us gain further insights into Palgrove, I wonder if you can just take us through some of the elements of your strategy document. In particular, what were your strengths and weaknesses?
Yeah, it's a bit of a navel-gazing exercise, and it's pretty tough for someone who's been in business for a long time to actually identify that you do have strengths and weaknesses, and sometimes they balance out. For us, we weren't large landholders. We didn't have extensive, massive, acres of land that we had to offer to an investor. What we did have is really high quality assets, land assets, strategically bought over the years to, de-risk season and climate and whatever. So I guess we had that, but what we did have is we had the soft assets, those soft things like we had integrity. And that was just, when we talked to investors, that was almost a number one thing, because that brought the trust. We had a reputation in industry, that was important. So those soft assets, I think people shouldn't disregard those. It's not all about the financials. You can change the way you do things to actually meet your financial expectations, but you can never change things like integrity and reputation. We had a very clear vision of what the growth strategy was. We had a passion for it too. It was something that we talked and thought about for a long time, but just weren't quite sure how we were going to get there. We had a wonderful business, which feedstock is genetics, of course, and it's it's generational. It's something very real. It's something that can add value. So we knew we had that. We just had to scale that up, and rather than looking to scale seed stock up, we said, well, let's leverage the commercial cattle enterprise off that and actually get value for our commercial cattle in the market because of our seed stock brand. So that's kind of what the story was. We broke it up a little bit in terms of there was land asset that we knew was highly valuable to an investor going forward and acquiring more. The people was the other thing, apart from the cattle, but the people was, it was an important part because you had skilled management in there. You had processes and procedures and systems and already established and built. And that was attractive to an investor, because to start from scratch and do that without that sort of continuity is really very difficult. And so all of our staff came across. And it was sort of a, it was an established business, long reputation of, I guess, integrity and all of that. And it actually, when you build the picture, we were surprised really what was of interest and attractive to the investors that we would have probably just thought, oh, well, that's just the way we do things. It was so, I guess that financial part of it was very much front and centre, but all of those other things really played a part. And
so the growth story was very much taking your genetics, buying quality land assets and building a commercial herd that benefited from those superior genetics.
Correct. And we'd long known that our clients were benefiting, and that was wonderful, but we wanted an opportunity as well to be able to integrate some of our clients' product into something that we do ourselves as well. And we'd never had that opportunity because we just never had the scale to do it. And hopefully we're on our way to doing that now.
So what about your weaknesses?
Oh gosh, so many. I think when you're looking at getting an investor on board, you kind of need to be very honest with yourself about what those weaknesses are. We saw ourselves as quite a large scale operator. In the whole scheme of things, we are not, or we were not. And once we sort of faced that, that's when the growth story became the important part of it. Yes, you are this size at the beginning of the transition, but this is where we're scaling up to, and this is how we're going to do it. This is how we're going to answer all of those questions that you've got. And I think once we learned that was just as valuable, that became a strength, because not everybody wants to take on a business that's operating as is and without somewhere to go. And I think if you're an investor, you've got to think, well, the benefits have to be either long-term or short-term. And if they're short-term, my goodness, you've got to have enormous revenue numbers and profitability. If you're a bit longer term, you've got to have that strategy to get you to 10, 20 or whatever years in terms of capital gain. So scale didn't then become an issue as we worked on that growth strategy. The other thing was, you've got to have that succession. You've got to understand what the future looks like, where you sit in that business, and that took us an awful lot. We did hear it a number of times from potential investors. Well, you've got 2 key personnel in your business, or 3 if we include some of our other staff, but that's a real risk to an investor, because if we decide to go without proper succession in place, their investment is at risk. So that was another key thing. We had to actually work out how we do exit the business, and exit in such a way that it didn't create a risk for the investor. And of course, we heard that same old thing: commodities, agriculture, Australian climate. We heard that over and over again. And I think, if someone in the investment space doesn't understand Australian ag, you really are wasting your time trying to beat down the door, because if they don't get that, they're not going to get your business. So that cuts out a lot of investors anyway, who don't understand the highs and lows of Australian ag.
Yeah. I know I've seen a chart of variability of rainfall by country, and Australia takes first prize. If we can turn then to what's required to be investor ready. In the second webinar, Denny Olsen gave us a blueprint for what was required. I'm just wondering if you can talk through the cornerstone elements of Palgrove's investment readiness.
It was so many parts to it. It's really difficult to sort of break it down into a couple. But for example, the strategic plan, as I said before, you've got to have that vision. You start with the vision, and then you go to people who can help you sort of produce what's required to demonstrate that vision. And we went straight to our to an advisory accountant, BDO, thank you, who helped to break it down, and they understood what those investors were looking for too. That helped us to sort of piece together, that documentation that we required. And of course, you need an information memorandum, and that has to be not just a nice story. It has to be, triggered by what the investor is looking for. We went about trying to upskill ourselves, and every meeting we went to, and there were a lot, with advisors or with anyone we could find to help us to understand corporate agriculture. We would go with questions always. We tried to understand the corporate ag people in the space already, and what were their risks, what did we need to know that they were doing, that we should be doing. And also we sort of started to trend the commodity cycles and look at a more macro sort of view of the world, which we never really had to do before because our market was very simple. We understood our market. It didn't change much, and we could control that up or down. When you start to look at corporate investment, they do look at the mega trends or the emerging risks a lot more, and they are going to be affected by those because they've got somebody they have to report to within their organisation as well. So we started to understand what their touch points were. Then we looked at the that financial modelling. We sort of worked on a 10-year period because we felt that could give a true picture of what our investment would look like, and that was a turning point for us, that we actually, even if we didn't find an investor, having that knowledge just helped us to make better decisions anyway. So, you just go armed with knowledge to anyone who will listen to you and answer your questions.
And what about the structure? What was that journey in terms of having a structure that could be attractive to an investor?
Well, most family operations, of course, have either a trust or a company, and then may or may not have different entities owning the land. We had a fairly simple model, but we knew that it would have to be changed for an investor because of whatever their compliance requirements, particularly overseas investors. So we had to then say, well, is our structure investor ready for a broad range of investors? And we sort of decided it wasn't, and had to go about getting that set up so that it could be sort of easily, so that shareholdings or whatever could be easily transferred. And that's the time you're having conversations with your children or whoever your stakeholders are in your agricultural entity, and you really have to have some difficult questions, and that comes to agreeing with your investor what they want out of your business too. And until you know that, it's very difficult to actually have your structure right. Yeah. So I guess we got great advice about what the broad, the more general types of structures should look like or would look like. And then once we got the investment green light, then we put in place those additional things like MIT and whatever.
So what was the general structure? Put all your hard assets, land, in one entity and operating high risk in another entity?
Yes, and look, a lot of it had to do with the investors' established structures as well, and how they had to do their processes. But for us, it was, yes, obviously separating land, people and cattle, with IP in the cattle. So because that's where the IP sits with us. So yeah, that was pretty interesting, and it's really quite an easy structure to operate under once you understand it all.
And we've talked a little bit about people, but just wondering if you can just go through it a little bit more in terms of what's required.
I think the people, when we run businesses, we forget the value of people, and it wasn't until we started talking to investors that they wanted the guarantee that not only us as senior managers came with the investment, but also the established staffing. We'd selected some fabulous staff over the years, and I think we had a sort of a situation where staff wanted to come to us because they could learn certain things from us, and so that was actually fairly valuable. we started to sort of then think about the governance of how this looks. You know, we needed some skills to be brought into the board, particularly the finance side, which we did. And then we needed good governance, a chairman who was well experienced in governance. So because you've got two partners basically with different backgrounds, different cultures, different understandings of what they wanted out of an investment. So for us, as you know, remaining in the partnership, we wanted certain things, and the institution would of course want certain things. So we had to come up with a structure that actually worked, you know, for both of us. So we used to sort of, I guess, before the investor came along, we'd set ourselves up to kind of understand those corporate, the way that corporates set up their units or business departments, and started to sort of think very much in clusters of those sorts of things. And when you're a husband and wife running a livestock operation, that doesn't sort of sit with, you know, you do your husband's job and he does your job most of the time. So we have to really think about those and where they may sit after a successful investment. And that you know, that was very much with the whole team to come to terms with that, so it wouldn't be such a shock when we did change to a new enterprise.
And what about processes?
Yeah, very much. You know, most family farmers are blissfully unaware of some of the compliance that we have to, and the liabilities, particularly around WH&S and employment, HR entitlements, making sure that you're not on the front page of the newspaper for underpaying staff, or, you know, it's things like that that you probably take for granted, that if you offer someone a, you know, amount of money to come and work for you, they'd be happy with it, you're happy with it. Well, actually, you're underpaying them because of the hours they work. So most of us didn't sort of see that as a priority risk. Certainly when an institution comes on board, those sorts of compliance and regulatory parts of your business are increasingly important, very important. Yeah, risk is number one.
So you're all investment ready. How did you go about selecting the perfect investor? It's obviously not an easy journey, not a straight road, but you got there in the end. How did you do it?
It certainly didn't happen in weeks or months. It was years. From the time that we decided this was the direction we wanted to take, then we had to actually work out what type of investor, and that's not a really easy thing to do, because you know, there's so many out there. There's family offices and private equity and institutions and individual people. You know, there's entrepreneurs and business people all over the place who want to invest in agriculture, but they want to invest in a different way than owning directly themselves. So kind of was a, and we always say it's kind of a bit of a roller coaster, but also a dance. You know, you've got to find that partner and have a little bit of a, you know, waltz around the room with them, and then decide if they're going to stick. We did a lot of travel. We talked to a lot of government trade, and we went on all sorts of trade missions and investment missions overseas. We were really out of our comfort zone, because a lot of those established companies who were on those trips with us, you know, had I guess they were corporates that just looking for more investment. So we were really out of our comfort zone. We did have a couple of quite interesting sort of quite interesting meetings, and you know, we knew almost immediately that it was not for us, but how do we get out of this office politely, and run for the door. And you know, we woke up a few times. We came very close on one private equity deal, and we woke up in the middle of the night, sort of, you know, together, and just, what are we doing? And the phone the next morning just said, look, it's not for us. And so things like that, and you know, we knew that we were a long-term business that needed that long-term sustainability, someone who was going to treat our land and people and cattle properly, because they were our values. And so to align with someone who was also looking for that same thing, it is like a maze. You just have to, patience is, everyone keeps saying, you know, have patience. And it really takes a lot of patience, because you can't rush into it. If it's the wrong investor, you're going to have a really nasty few years ahead of you. And at the end of the day, you know, if you think of the smorgasbord of investments that these investment committees in superannuation funds, for example, have on their desk or come across their desk every day, it's quite astounding how they found us. It is actually quite astounding, because the likelihood of you being picked up by that super fund, being the right place, the right time, the right people, the right everything, that was quite a unique experience, I suppose, because of what we'd seen of so many of the wrong type of investor, that when we sort of finally did find the right one, it was quite miraculous.
So New Zealand's at your door. What was the process you went through in terms of satisfying yourself that they were the right investor?
Well, I think we did look, certainly independent advice is your best friend, someone who is on your side. Yes, it's exciting and thrilling to find an investor finally after such a long time, but you've actually got to make sure that all the boxes tick. Is this actually what you want? Is it designed for your benefit as well as the investor's benefit? Because at the end of the day, you know, if you're leaving equity in there, there's some risk involved in you getting that out and whatever. So legal and tax and financial advice were just key. So then you do the once again, that sort of give and take, and it does take time of getting the legalities right, getting the agreed things right. You can agree things in principle, and then suddenly when you put it, into a legal document, it looks a lot different to what you thought. So, and that's building trust. Every one of those meetings we had, certainly with New Zealand Super, we were building trust on both sides. So there is never a good agreement where one party gets everything they want. It's never going to be a good outcome. So that was very much top of mind for us, that there would be compromise and there would be give and take. And that is the same in any good relationship.
So it's now almost 3 years since New Zealand Super invested in Palgrove. What's been the post-match summary?
Yeah, for us, it's been a changed environment in terms of, I think the vision has only been strengthened, which has been very exciting for us. Of course, we've made a number of acquisitions and grown the business since that time. But for us, it was kind of that adjustment to reporting, which is, quarterly, monthly, annually. The fact that we were not making decisions ourselves was probably the hardest thing to sort of come to terms with initially. I think we've gone well beyond that now, and we're in a really comfortable space, but it does take time. And I think what we did understand, that thank goodness we hadn't rushed into the private equity for us, that we had this long-term investment partner that actually we really liked. We really liked the people. We understood and came to terms with that high level of best practice compliance, and everything had to be done just a little step better than everyone else, because for any institution, they don't want to see their name associated with a business that was, either criticised for bad animal welfare treatment or, underpayment of staff or anything like that. So it's a business that has to keep that little bit above the standards that, probably the rest of us as private companies would sit at, because you're a target, and the bigger you are or the bigger you get, the more likely you are to attract, that sort of oversight. We kind of made sure that we had the skills in place, and we've been building those ever since. The skills in place to make sure that A, the reporting was good, but B, that our strategic plan could be achieved. And there's not one or two people can do that. When you grow, you have to actually have some expertise brought in, which we have done. And I think we're in a really nice place now where we've got all of those bases covered, ready for that next scalability. And it's all sitting there. It's had to be grown, and I know it's almost 3 years, but the first 12 months is really just a whoa. Yeah. I'm not sure what we're doing. No, we're not sure what you're doing either. But it's a growth of understanding what your responsibilities are, and also, I mean, at the end of the day, you're still trying to run a business. So it's an added level of on top of what you would ordinarily be doing. But you know, at the end of the day, why did we start the journey? Well, we started the journey to achieve this growth strategy and see our vision coming into reality, and that's what we've done, and that's the exciting part of it.
So what about your exit?
Yeah, well, it's no secret. David and I, my husband and I, will be leaving mid-year this year as executive. We'll continue on the board of directors, and of course we'll be continuing on with our equity relationship with New Zealand Super. But we saw it as a time of the growth is really just happening and underway. We think the skills required in this next stage are skills that we perhaps, you know, don't have. And it's always that thing that I think you've got to be a big enough person to say, well, it's now time for someone else to actually take this and run with it. You know, keep the vision, but let's have that impact as a director rather than actually working daily in the business. And I think it'll be a really exciting sort of next few years for us.
So you get to continue to watch the business from the boardroom.
Absolutely, but you know, not to say that we won't be at every bull sale still, and you know, and absolute you know, interest in everything that and the difficulty is to take our nose out of the operations. And so that'll be our next change for us, is to sort of, you know, make sure that we allow that next executive to take that and run with it.
Prue, you have a remarkable investment ready story to tell. Thank you so much for sharing it with us. Congratulations again on all your achievements. Working as I do in private business, I know how important it is for owners to have the confidence that when they do ride out into the sunset, not that you're quite doing that yet, that the business will continue to prosper long after you're gone. Must be enormously satisfying for you and David, knowing that this will be the case with New Zealand Super as an owner. Prue and I are happy to take questions, but while people are organising their questions, Sarah, you might like to say a few words.
Sure, thanks, Margot. While we're waiting for those questions to come through on the chat, I just want to say thank you so much, Margot and Prue, for taking the time today to take us through the investor readiness journey. I think it is a really nice summary of the first two webinars, and it really gives us such a good understanding of how that process was applied in your journey, and it sounds like extremely successfully, and you're quite happy with the result, which is amazing. As mentioned earlier, this webinar and the two prior webinars can be found on the BDO website or the Department of Primary Industries and Regional Development's website, should you want to refer to them later. We also mentioned the masterclasses, which are still to be confirmed with some of the disruptions, so we will be in contact and keep an eye out for those. If you do want any further information or have any questions about the program, please feel free to reach out either to myself or the Department of Primary Industries and Regional Development. Happy to answer anything that you have questions on. Margot, I'll hand it back to you whether we've got any questions or not. If not, we can wrap it up.
We've just got one question, Prue. How long you said it took a long time, but how long was the whole investment?
That's a really good You'd think it would be an easy question to answer, but it ended up being about, and I don't want to frighten anyone here, but it ended up being about 4 years.
Yeah.
And that was from start to finish. That was from piecing together our own strategy in our mind as to what we wanted to do, and actually taking that time to then decide that it wasn't bank finance that was going to get us there. It was going to have to be, you know, capital funding from somewhere else or an equity partner. So that was, yeah, that was probably the longest part of it. Well, here we are, this tiny little, you know, people, you know, sitting on our farm here. How would we ever invite an investor in that laugh at us? And so yeah, I guess it was 4 years from the time we started thinking about that, and actually the reality of this is what we're going to do.
Right. Did you ever consider not going through the process once you'd started? Once you'd started it, did you look to bail at any point?
I think I'm going to say no, we didn't. The process frustrated us a lot because we used to come home from meetings and sort of say, well, why don't people get it? Why don't they understand it? And maybe that was part of, we hadn't come up with the right investor, but also it could have been part of us not actually, producing something that people could understand. And we're not really quite sure what that was, but I think the length of time that it took, and then there's the ones that you did get that agreement, and then you found out that it wasn't the right party. So, that there was a lot of frustration. We kept saying to ourselves, look, we'll give it another 6 months and see how it goes. And that was kind of, really within a month of that saying that, we'd arranged with New Zealand Super to start to discuss, and that takes a long time too. That process was really quite long. But I don't think at any point we said this is the wrong thing to do, because we just had such confidence in what the outcome could be that we couldn't believe that someone else couldn't see that too. And that's a bit, that sounds a bit, ridiculous, I suppose, when I look at it now. But if you don't have that real vision yourself, or that actual, we can do this, well, no one else is going to believe in you either. So that was very much part of not giving up. And what would happen is a fresh, we'd get a fresh look at it from, a country or an area or whatever where we hadn't heard from before. And that was everyone from family offices. And looking at it, we could have worked very happily with family, with those sorts of investors, I think. And now we see more and more of them in agriculture. It's very exciting, Twiggy Forrest and Gina Reinhardt and the like, and, really getting their hands into ag, particularly livestock, that they must get something that we got back then. So that's really exciting for us, those family offices sort of, coming on board to what is traditionally, just a family farming type operation. And if you're not a family farmer, you're a corporate. So for us, we were somewhere in between. So it's really exciting to see some of those now coming on board. Yeah.
Thank you. We have no further questions, so I'd just like to thank everyone for attending today, and hope you've gained some insights.